but I think we had a very good meeting on interest rates. And he said to me, now I don't know if he's going to say this on Thursday or whenever he speaks, but he said to me very strongly, the country is doing well. He said, congratulations, the country is doing really well. And I got that to mean that I think he's going to start recommending lower rates.
Because of that conversation?
How do you think that the Supreme country really is doing well?
And Visa, they have thousands of really smart people working on this problem. What do you think?
I think the graveyards are full of people who are shorting MasterCard and Visa on all these theses.
True.
And they've been proven wrong, and I'm telling you, they're going to be proven wrong again and again and again. So I disagree with the disruption thesis on those names.
Saturday Night Live, if you haven't seen it, did a really funny sketch on Bitcoin. It was like three people talking around a table through, and they were like, and two like got it, and the one, and it was just, but the funny point was that how complicated Bitcoin still really is, and people were saying things like blockchain ledgers, like it's a normal thing to say. I think Michael Novogratz would argue that we're in like not even the first inning, we're in like the first batter of the first inning of where this goes. So where do you see it going?
On Bitcoin or on stablecoin?
On the whole crypto ecosystem of one day it becoming, Kelly goes home and says to her husband, Eric, I just went to Wegmans and, used stable coins to purchase my groceries through a phone app.
So two things I have to say, like stablecoins are disruptive, just not to the payments industry. They're disruptive to certain pockets in payments, right? They're disruptive to remittances. So if you're in the business of remitting money and, taking a lot of fees for that, that's going to be disruptive, and B2B cross-border, but nothing that touches consumer, anything international, but those are not being serviced by the networks right now.
But can they? I'm begging you. I'm begging them, okay? This is where I'd get on board the train, is if they thought it would disrupt. We always talk about the 3% fees that get charged, interchange fees. Is that an area that this could really disrupt? Because I hear that case being made by a lot of the kind of crypto bulls about stable coins.
Correct, but if you think about it, credit is they're offering a real service and you're getting points. So you kind of have to get the consumer to want to pay with stable coins. The consumer is indifferent. And when it comes to debit...
But is yield to stable coins like points are to credit cards?
Correct, but the yield is only as good as rates are. So if you believe that, we're going to get rate cuts, right, which is kind of what we're thinking, then monetizing the business of stablecoin is going to be very difficult. The story is there, and that's why Circle, we have an underperformance Circle. That's why the stock ripped. But if you look at the USDC market cap, it literally hasn't moved since April. So there's a massive bifurcation between the story and the reality.
What's the market, about 100 billion, something like that?
$65 billion.
65, because Tether's the biggest, no?
So Tether is much bigger. But again, it's a great business right now because rates are high. But as soon as rates come down, there's going to be no business.
But look at that. I mean, that's a coin market cap. Coinbase, which is an exchange, effectively, is bigger than the ICE, the parent company of the New York Stock Exchange. Yeah. Coinbase is now larger. Coinbase, in some ways, is the largest exchange in the United States.
Yeah, and Coinbase...
And 95% of people that watch this show probably couldn't tell you exactly what they do.
I can't, but Coinbase...
One would hope.
I hope so.
You're
That's
the guest.
Why I'm here. Thank you. But actually, what's interesting about this is Coinbase gets the better share of revenue of USDC versus Circle.
Do they?
So they get 100% of everything that's on their platform and 50% of everything that's on Circle's platform.
Wow.
So they have a sweetheart deal.
Do you think that persists?
Yeah, they have a clause that for every deal to be renegotiated, they need to give their consent.
Wow.
So Coinbase actually has the upper hand on Circle. It's the better name when it comes to stablecoins than Circle. So the Fiserv stablecoin does use, but they're using two different stablecoins. They're using Circle and another one. Some are completely proprietary, like the PayPal one. The way we view this is there's going to be a lot of stable coins and they're going to be interchangeable. And the only reason for that is because it's just $1. Mm-hmm. So you can swap USDC with Tether or Tether with USDC at some point. It's just $1 for $1.
Are you even going to...
With the markets booming, the economy strong, credit calm, and the only potential issue has nothing to do at all with his own policy. He didn't put the tariffs in place. So why does it make sense that he should resign now?
It's all about preserving the independence of the central bank. That is the guiding principle. Look, as you can imagine, I've discussed this with lots of people in markets, in the policy world, and they split into two, Scott. Those who vehemently disagree with me and those who agree with me but don't want to go public. We all agree on the importance of central bank independence. We all agree that we are far away from the first best, whereby Powell completes his term and doesn't get attacked. What we disagree on is, in the world of second best, what is the least costly option for the Fed? Is it Powell staying and the attacks not just deepening but widening? You saw Speaker Johnson get into the act this week, and you risk a fundamental long-term damage to the independence of the central bank. Or alternatively, he steps down, de-escalates the situation, and yes, there is a cost to independence in the sense that the chair has stepped down, but you don't get the deep intrusion into the institution that undermine its operational autonomy.
Big story going on that, the stablecoin issuance in the US that's going to ramp up, where we're probably going to go from 250 billion of stablecoins being issued probably to 3, if not even 4 trillion. And of course, a lot of the stablecoins are going to be on Ethereum. So Ethereum is really, the game plan here for a lot of investors. And, it has been cheap. It has been neglected, up until literally, 2 months ago, basically. And I think that's where the demand is really coming from. But I think the interesting aspect when we break it down, where is actually the buying really coming from? So when we see that there is this big shift going on from the mega whales, from the early adopters, from the early investors, basically a lot of the early miners, and they have been selling really over the last kind of 2, 3, 4 years. But what's new now is really since last July, since Trump spoke at the Bitcoin, Las Vegas convention, really, or a national convention center where he spoke, it's really that these whales, which is the wallets of 100 to 1,000 Bitcoins, are really increasing, buying aggressively. We know, for example, that BlackRock is using around 500 wallets, MicroStrategy is using around 500 different wallets, and they have been really aggressively buying. But over the last couple of days, it's really these mega whales that have been really distributing a lot more BTC than these whales are buying. And I think that's why we're consolidating. That's why we're going down a little bit, because of this supply overhang that's in the market.
Welcome to the Crypto Teacher. Don't forget to like and subscribe to the channel.
And I come back with that video just to make you think. And guys, make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have Trump playing the Hegelian dialectic. Says that Jerome Powell sounds like he's going to start cutting rates. The economy is doing great. And we know both of those are not correct. The consumer is hurting. Worse than 2008. People can't even afford the housing. Guys, you can't make this stuff up. And I've talked about this several times. MasterCard and Visa. Will they be hurt by these stablecoins and crypto? Us and crypto, no, not at all. Because MasterCard and Visa and the rest of these big banks have been funding crypto from the beginning. They're just integrating the technology. Like Gary Gensler told us, it's a monopoly. It's a banking monopoly. They're not going to let you take over, but they'll definitely use your technology and give you a piece. And remember, the Crypto Teacher told you. And then we have Coinbase getting a piece of Circle's money. And we know why. That's right. And Andreessen, my guy, and Goldman Sachs, they had their hands all over them from the beginning. So, of course, they're going to get paid. And remember, the Crypto Teacher told you. And we have central banks at the end of the day will stay control of the money supply. Remember, if I'm in charge of money supply, I care not who makes the laws. And eventually, you'll be voting on blockchain, and your politicians are going to be AI. And remember, the Crypto Teacher told you. And we have the media narrative playing the Hegelian dialectic that Powell is going to resign. If he resigns, we know things are about to speed up. So the only thing we're going to do is get our popcorn, sit back, and let it play out. And we have the mega whales are selling inside of these inflows. And we know why we pulled back today, because we had futures contracts ending. Remember, only thing they're doing is betting on the price. Once we get in-kind redemptions passed, then the volatility is going to change. And remember, the crypto teacher told you. And I talked about this yesterday. Trump wants that weaker dollar and all the benefits. Remember, once he devalues the dollar, it's going to devalue the debt to get us on this level playing field. And then they'll be able to hand out all that free money. And remember, the crypto teacher told you. And we have the M2 money supply is going crazy. And we know why. They need to keep this thing up until they can get this digital economy, this fourth industrial revolution moving. And that's the reason why we need to look out for that next black swan, because it is definitely coming. And remember, the crypto teacher told you. Now we have the jobs report coming out next week, right along with GDP. And guess what? Jerome Powell is going to be off in the wind. And those are the two biggest reports, because if we come into a negative GDP, that'll be 2 in a row, and they have to announce that we're in a recession. So we'll see what that GDP number looks like. But Jerome Powell would have already given his speech, and we don't see him again until September. And then we have a currency war in the making, and it's definitely coming up. Now, we know China has been devaluing their currency forever. And now it's time for the United States to do the same so we can get this debt down, and then also bring in the machines and hand the people free money. But for right now, the euro is the new king. But we know that's not going to last long. And that's the reason why Europe is turning to China. And I have a strong feeling that somewhere in Europe, they're going to be attacked. And that's going to start the big drums of beating. And remember, the crypto teacher told you. Because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Dollar, we want a weaker dollar. So the point here is through all the macroeconomic reasons why a dollar going down is good for manufacturing. It's good for revenues in the S&P 500. About 30% of revenues in the S&P 500 comes from abroad. But he also did talk about, well, when the dollar goes down, you do get more inflation. And the Fed's model of the U.S. economy would tell you that the 10% depreciation of the dollar so far this year is going to lift inflation over the next 9 months by roughly almost a half a percentage point. So that means that the challenge here is when the dollar goes down and you already have inflation well above the Fed's target, is of course that the risk is that inflation could be moving higher. But I do think the dollar comment is very important because it is emphasizing there is no free lunch in macroeconomics. You get something you benefit from if the dollar goes down, but you're hurt on the other side by the risk being that inflation could go up.
Around today is about money supply and M2, which I think is now growing again at the fastest rate since, 22?
There's a lot of liquidity out there still hunting assets, hunting yield, hunting the S&P 500, absolutely.
So does that affect your inflation expectations or year-end yield expectations?
Well, to the discussion also that Trump here mentioned about with Powell, I mean, it's absolutely correct when Powell says the economy has done actually really well up to this point. And that's why the debate in markets and the debate, of course, in the forecast is, will we get this slowdown that the economists and the Fed themselves have been forecasting? Or is this sentiment improvements that we've had since April, are they enough for the S&P to continue to go up? Or should we begin to worry about that? Well, yes, things may still be good, but we still have headwinds coming from the pick coming through the Python on tariffs. We still have the headwinds coming from student loan payments restarting. We still have the headwinds from a broad range of things with the consumer being pressured by the level of high rates, holding things down. So on the overall outlook, yes, sentiment is better, but the Fed still has a forecast of growth slowing down. That's the consensus forecast. That's also our forecast.
Well, I think it depends on what happens with jobs. And we'll get a jobs report next week. And last month was sort of influenced by that surge in public sector jobs that we got at the local level from schools. So what do you expect this week?
Absolutely. So the consensus expects 100,000 next Friday. And that's, of course, very important because that's still steady job growth. But exactly as you're saying, the last few months we've seen private sector job growth slow down. And that's, of course, worrying because the private sector job growth is the most important part of how the market looks at what's going on in the labor market. And the fact that we at the same time have deportations running at, in Trump's estimates, roughly 2,000 to 3,000 is the goal to deport every day. If you annualize that, that brings you to to deportations of around 1 million people at an annual rate. If you remove people from the labor force, that also ultimately begins to have consequences for job growth. So job growth could potentially be going down over the next several months simply because deportations is running at this very.
You went to China for a big summit in Beijing. It was Ursula von der Leyen, Xi Jinping. And when President Trump first got elected, both the EU and China kind of turned towards each other, and there was this notion that maybe they could help each other out, right? But that clearly to the EU became clear to them that was a Faustian bargain because the Chinese have so much overcapacity when it comes to things like EVs. Ursula von der Leyen said very clearly yesterday in China, your overcapacity is threatening the industrialization of China. We have to do something about
Europe,
that.
yeah.
Of Europe. And we've got to do something about that. The meeting was described as tense. So that has not worked out. And also with détente between China and the U.S. occurring, China doesn't have as much, of a need to strike a deal with the EU.
That would put them at a disadvantage with
Right.
some of these things. But I mean, this overcapacity, this over-manufacturing, that's been a problem that we've recognized for a long time. Even Janet Yellen, when she was Treasury Secretary, would make comments about this. She gave a speech to the Economic Club in New York talking about what a problem this was. Do you see a way that the U.S., Europe, and others kind of team up at least on that front to say we're not going to continue to take your overcapacity, your overbuild?
An EV in Europe for only 20,000
Euros,
euros.
with a 45% tariff.
Because the Chinese have let the currency weaken against the euro. And so when that happens, the inflationary impact of the tariff goes away. So when everybody says, oh, tariffs are inflationary, not necessarily. It depends on what happens with the currency. And we see that happening. And by the way,
yeah, you see that with the dollar.
well, the dollar got weaker against all other currencies in the world, except against the Chinese yuan. It's been flat, which means by definition, the Chinese have kept it weak, right? Because
intentionally to deal with any tariffs that
exactly.
come in. Wow.
You see what I?
Yeah,
To soften that and to make sure their exports aren't as impacted.
So they can afford higher tariffs if we put them on.
Well, I mean, I don't
In the short
know,
run,
not
In the short-
145% perhaps, but there's a lot of wiggle room.
CPI and PPI. Once they were behind us, the yield curve stopped steepening, long end rates stopped leading rates higher. And that is significant to pay attention to. In foreign exchange land, well, euro is the new king. Whether it's the euro yen or the dollar yen or the euro versus dollar. Now let's look at the euro yen versus dollar yen on one chart. This chart goes back 1 year because the euro yen is at a 1 year high. You can see the dollar yen is nowhere near that, the dollar underperforming. And the reason the euro is doing so well against the yen, and this is significant, it's because leading up to the election, there was a big nervous issue regarding fiscal prudence and austerity measures to try to control their debt and some of the stimulus they put on in the past. Well, even though the election's over, that's a dynamic that's still in place. And finally, here's the euro versus dollar. You can see the euro is hovering awfully close to a 4-year high.
Going to a different economy. And we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust. and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as